What's up? Carl first witnessed. How you guys doing? So I'm gonna be mostly working on Pickle's picks right now, but I'll try to pick up some questions and shit as I go. Just got negative fucking what? Negative 1.44 trillion? It's fucking uh no. All right. No, I'm not drunk. I mean, from airplane booze? You know how much you have to fucking drink, man? They cut you off after like 5 adult beverages. And they're all children sized. I am wearing pajamas, actually. You can't see them, but they're on me. All right. Um, fucking seriously. Oh, okay. Yeah, no problem. I hope everyone had a great Mother's Day. Hey, Greek, I'm watching you from my bed. That's weird. FYI, adult beverages are never children sized. FUD. How much you want to bet this week is straight downs starting tomorrow? I'd be okay with that. Hmm. the fuck do you get the yield curve inversion to display on TradingView? Better buy calls then. Watch to like ratio all-time high. Do we have to pay more to hear you talk? No. I'm just busy doing other shit right now. Is this a slumber party? Kind of. Um, I'll do SPX in a little bit, but right now I'm trying to fucking do something else.
Yo.
No questions? I mean, you guys can ask questions. I'm doing Pickles picks, so it's like I'll get to them as soon as I can. It's definitely not going to be the rigid professional structure you're used to. So, oh, hey, oh, it's Dork. Hey, Dork.
Sorry, man. I was like, I for some reason, like, I was just hearing silence. I was like, I
Why
wonder if he's
can't I
just sitting
hear
there in
you?
silence and Pickles picks. And so I said, yo. Then I heard myself as I realized I had my laptop muted because I'm a dumbass.
Did I unplug my fucking headphones again? No. Hold on. Maybe now I can hear you.
Yeah, can you hear me now?
Yeah, I can hear you now. What's up?
Good.
Yo,
That's like
how the
that.
fuck do I get the yield curve to pull up on TradingView?
The yield curve.
Is it St. Louis Fed data?
So I think you can click on a bond, and then like in that extra little data panel in the watch list, it shows the yield curve.
Wait, what?
Yeah, here I'll show you a screenshot really quick of what I'm talking about. It's here. See on the right side of this, you like scroll down or whatever, that little extra panel down there gives you a little
Yeah,
mini yield curve. That's the one I know of at least.
that's lame. I want it over
It's
the
not the best yield
10-year.
curve. 10 years on there. You
Divide
can
it.
like you could just if you just open any of the bonds, it'll show the full yield curve.
No, it doesn't do it. Plus? This is like a fucking cock tease.
7 glizzies in. No, I went to a bar last night with a bunch of my old buddies from high school and all that with my girlfriend, and I had like a million Coors Lights and pretty dehydrated now.
You know, given that Coors Light's mostly water, you think it'd be okay.
Yeah, I know, but the trace amounts of alcohol make it a bit of a diuretic, so you end up peeing all the water out and then some.
What's up, Bithead? Man, Bithead's awake for a stream. Look at this shit.
Hey, John Wilkes Booth, what's up? I did have a rad weekend. I hope you did too.
What's up, Boof? So did you slam some glizzies today or not? I mean, I think that's all chat cares about.
I did not go full Glizzy gang to this weekend.
For sure. All
I did
right.
have some Scrapple though. Does anybody here know what Scrapple is?
Yeah, I know what Scrapple is. It's disgusting. People in Delaware eat it.
Yeah, I think it's pretty good.
You like it? It's like
Yeah,
shitty. It's like shitty sausage, right? It's like sausage, but like made from even less desirable parts of the pig.
I mean, it used to like Scrapple used to be scraps, but nowadays they make it with good bits. But yeah, it's pretty much like it's kind of like how you make like a broth or something. You just kind of cook down the meat off like the bones and stuff, and then you reduce it, and then you put in like some cornmeal, I believe it is, and yeah, and then you gotta fry it pretty good on both sides to really get that to bring the flavor out because the cornmeal.
I think I found it. It's fucking. It's under the goddamn Fred data.
What, the yield curve?
Yeah,
You can just look at it on TradingView? No way.
should be able to. I'm
All I
convinced
could
it's
find was a little tiny
possible.
one.
Hold on. T.
If they put just a fucking yield curve on this thing, that'd be amazing. I wouldn't have to plot like a million fucking treasuries in one chart.
Nope. Oh, here we go. They just have the fucking actual chart. That's all I wanted. Boom. Look at that shit.
10's less the 3 month. Okay,
Yeah,
that's a good one. The 3 month has been going insane.
I know.
The volatility's been interesting.
Welcome to Dillionaire, McConnerberry. Thanks, man. I play you a song, but I'll deafen everybody. I'll get you tomorrow, if you remind me. Thanks, JC. All right. Does anybody have any questions? People are just hanging out, I think. Lots of love to you, man. Sorry for my absence. Lots of family stuff. It's all good, man. That's awesome, Bithead. I'm glad to see you around, dude. Scrapple is described as a congealed loaf. I rest my case. Yeah. No, I
That's
don't
about
get me.
right.
I don't care what Dork says about Scrapple. I agree with you.
I don't disagree. So good. Yeah, so 1 second, guy. The thing was I didn't pay for a single drink last night, and like, I wasn't gonna. My buddies are pretty blue collar, so I wasn't gonna have them be buying me fancy IPAs. I'll buy this for myself.
All right. Well, so the 10-year 3-month spread is fucking the lowest it's been this millennium. At like, yeah, 179 BPS down.
You saw that chart I posted in the SPX channel the other night, right? I posted like a bunch of yield curve inversions.
No.
Let me see if I could track it down.
But
It'll take me a second.
I've been looking at them while I was on the airplane. So I know they're all fucked.
Yeah,
They're all super fucked.
yeah, I went ahead and compiled like some of the full like the long end and short end, and then like the 1 and 2, so like kind of like the middle.
Mm-hmm.
And yeah, it's looking gnarly here. Let me see. I can put it in here so you can check it out. I thought it was interesting. So
Oh,
tens
okay.
and twos.
Yeah.
You got the benchmark, the 30 and the 1, and then the 2 and the 1. That's what I went for. And then there was another one I did too. But about like that. The other one was the actual full front end. This guy. Then this one's the benchmark in the front end, which
Ugh.
I thought this was really interesting.
Yeah.
But like,
Wait,
yeah, the yield curve.
benchmarks 3-month 10.
I thought it was the 10 and the 2.
Uh, uh for it depends. They use both.
I'm sure. Yeah. They both totally have different applications for sure.
With Nvidia 3000, Nvidia's not going to fucking $3,000. What's Nvidia doing?
3,000
Hold on.
after 10-to-1 reverse split.
I gotta look
That's
at.
when
I haven't looked at the fucking data on Nvidia yet. Ooh, Nvidia actually looks kind of shitty for a change. See, dealer deltas falling off. Call delta fell off into Friday. A little bit of a pullback. I mean, it's still shit, but a little goes a long way. Bot put delta is picking up. Fucking gamma max is still like 309, but gamma neutrals maybe gonna pull down. I mean, if gamma neutral follows the options flow, then we should see gamma neutral start to pull down a little bit this week. It's at 274.34 right now. It's quite high. Delta neutral's at 246. So delta exposure's rising, which I think is going to be kind of bearish. That needs to go quite a long ways though. But a bunch of call gamma fell off on Friday, so that's good. And IV's lowering because they're selling more and more positions. So, yeah, Nvidia's starting to look a little less rock fucking solid, but only a little. It's still gotta get some inertia. Like the problem with Nvidia is it can't get any fucking momentum going before, $5 billion it pumps it, and everyone fucking resells their short calls. Ugh.
This is the problem with trading Nvidia, right? Like I tried it, and then when I started losing a bunch of money, I just jumped out. But like,
I
it's
mean,
just such a
trading it,
fucking
I love.
thing.
Being long short on it is a fucking nightmare.
Yeah, that's what I mean. Yeah, I guess that's what I mean. Yeah, it's shorting Nvidia. That's the problem with it is that it's like shorting Microsoft at this point. Like you can, right? No one's gonna
Yeah.
stop you, but like it's just so fucking big, and people have so much faith in it right now that it's gonna be hard to like, realize neutrality even on a short position.
Well, I mean, Nvidia just needs to wind down for like 5 consecutive days. If that can ever happen, which it hasn't, but if we ever get 5 consecutive days of market downside, then Nvidia will probably drop pretty hard. But until then, it's gonna keep doing the same bullshit. At least the bullshit it's been doing has been super predictable.
Yeah, for sure. I mean, well, like the market hasn't picked a direction in over a month at this point.
Yeah, yeah.
That's so fucking annoying.
It's been pretty shitty. Although I think this week after the Michigan data, it's gonna be maybe a little different.
I mean, yeah, the Michigan data plus
I
is
mean,
the debt ceiling
they can
bill
still
passed?
revise the figure. Don't forget, because I think we just have the preliminary report, but we're the highest level we've been since like what 2012. Second highest since '08.
Second highest what now?
Like long-term inflation projection.
Oh, gotcha. Ooh. Overall net capital flows at 1 p.m. on Monday. That'll be interesting.
Yep.
What else we got? 3 and 6 auction. That's cool. Ooh, a manufacturing index before open. That'll also be interesting. Consensus minus 2.5, forecast 8. That's weird. God, this does not look good. I'm gonna post a chart of the uh, Empire State Manufacturing Index free to peep. You've probably seen it, but
Oh yeah, yeah.
I mean,
It's I mean it's volatile.
It's super volatile right now. Yeah, it's crazy volatile. You don't see that in any of the data.
Can you explain the 10 and the yield curve? Yeah. So it's the measure of difference between the interest rates on short-term and long-term government bonds, right? And it's commonly used as like an indicator of economic health. So the shape of the curve can reflect like expectations about future economic growth, like a normal upward sloping yield curve where rates are long-term rates are higher than short-term rates is well, it's indicative of stability or like a healthier market. And an inverted yield curve, which is what we have right now, can be a warning of like downturn or recession. Generally, yield curves, and I think the 3 month is used most as the 310 is used most as a recession predictor, and then the Fed uses the 210. By the way, Dork, like the 2 year, ten
Okay,
year, yeah. Um,
gotcha.
but generally, like inverted yield curves precede economic recessions. And I think the 3 month, 10 year is the most accurate. But it's also a reflection of like monetary policy, risk appetite, or like investor, like general like market sentiment, and like it can also impact some like financial sectors, like banking especially. Finance is very impacted by the yield curve. Banks tend to they earn profits by borrowing at lower short-term rates and lending at higher long-term ones. But that's part of the issue with banks right now, right?
Yeah, yield curve inversion naturally causes credit tightening because of that whole thing where you can't profit as much off the long-term spread because there's no positive spread on the yield curve, which means that yeah you can't isn't it? It's a borrow short, lend long.
Yeah.
So that strategy is not profitable with the yield curve inverted. So yeah, it affects the lending market a lot, especially over time.
Yeah. Dude named Dad, thanks for becoming a Dillionaire, man. I got Dork on right now, so I'm not gonna play the song because I'll blow up everyone's eardrums. But hit me up on the Discord and I'll get you added, dude. A little bit of bearish divergence on Nvidia, but slow. It's slow. It's not going to pick up any speed to the downside until it gets some like we need indexes to sell off for a fairly consistent period of time.
So I was thinking about it, Dirk.
What's
Uh,
up?
I want your off the cuff opinion of this.
Sure.
Um, Short IEF, long TLP.
Short IEF, long TLP.
TLT.
Oh, TLT.
Yeah. Actually,
Mm,
that's not the. I want like the what's the or maybe short SGov, long TLT. I
what's
think that's better.
the what's the 2 year one?
That I think that's shit, I don't remember. Uh, Fuck.
They're
The 2 years
shy.
UT. Yeah, there's shy. Yeah, shy is 1 to 3.
Shy might be good.
Yeah,
Short,
short shy.
short, shy,
Yeah.
long TLT. I,
Yeah.
I don't hate it. I'm long TLT. I'm not. I'm not short anything.
I mean, if we think the Fed's going to cut rates,
I don't really think the Fed's gonna cut rates.
they're probably not, but I feel
I
like it's a
think I
good hedge
think I
case
think like
too.
two more.
They'll pause for as long, like they'll just pause forever if the market recovers.
Give
So
me your off the cuff opinion. Sure, GME and AMC, but long ape.
Gaff,
Don't
give me
give
your off
away
the
our
cuff
fun
opinion.
strategy before we've started trying to pick up investors, Gaff.
Gaff, what about
We
this?
haven't courted any
Short
money yet.
Cardano.
What?
Short Cardano, long Bitcoin.
Wait, I got a better one. How about just short Cardano?
uh,
It's so crazy, it just might work. What happened last June? That the curve just dropped off. Oh, they fucking started raising rates in a pretty significant way.
yeah, June was the it wasn't June Jackson's hole and Volker, and then 75 basis points up the ass.
New Zelda game going for $70. Bearish for GameStop and bullish on inflation. Just like it's just profit gouging, right? Like it's price gouging consumers because they'll fucking buy it.
They got credit cards, bro. They're
The
fine.
fucking game sales do not float GME's margins. Just so you guys understand this, GameStop is not making a lot of money selling copies of Zelda. Okay? I know Superstock thinks it's like the second coming of fucking Jesus Christ, but it's not. They make like 30 cents a copy. It's shit. All the
Yeah,
profit
hardware's
goes to the
going up.
game studio.
Yeah, oh yeah, it's true. I was gonna say hardware because hardware has decent margins.
Hardware is not much better. Don't forget that like the PS5 is sold at a loss.
Oh, it's true. Yeah, I always
Yeah,
forget. Like, I come from the audio industry where margins are way different.
yeah, they're better. I had a buddy who worked in like he worked in VC and they wanted to buy Micro Center. And the margins are fucking or no, not Micro Center, Fries. The margins on like computer like PC components are fucking terrible. Like
It's
3%.
ooh, that's
Yeah.
terrible. I think at I don't know. I think at GC we were getting I don't know, it was somewhere between like on some products it was like 50% margin, on others it was like 20% between there and there, depending on if it was like a name brand thing or not. Like the more popular stuff was definitely slimmer margins. Uh
Is Guitar Center publicly traded?
no, but they were bought out by a publicly traded company. Um
Interesting.
they're like a big firm, like a financial firm that
Do you think
also
we're going to
owns
see
like
a spike in panhandlers over the recession?
probably.
Interesting. They're going to need equipment.
What we're gonna see. So what I've been looking for as one of my classic telltale signs is newer and newer cars showing up at those parking lots where the people sell cars. Every city's got one, you know.
Buskers. Busking. Yeah, yeah. Well, new car inventories are already rising.
Yeah, it's true. We'll see an increase of people trying to get famous on TikTok. That's for sure.
Hardware is 1 cent profit. Games okay. Accessories are where the money is. Former Target Leaf. Okay, thanks, Sir David P. Yeah, I know they make more money on accessories, especially used controllers and shit. GameStop makes a fortune on. That's where all their profit margins are, though, on used. They're a fucking pawn shop, right? I mean, no one wants to say it, but
I mean, I see nothing wrong with buying and selling used gear
I don't
at
either. I think they should
like 20%
expand that
above market.
aspect of their business and fully embrace their pawn shop roots.
Yeah, they shouldn't, but they should offer a little more for them. Like, I mean, the thing is that GameStop was pushing really hard on their margins on their used stuff, and I think if they narrowed that down and rewarded people more for bringing in their used shit, they could build it
More,
a lot faster.
yeah, well, more people would bring their used shit in. The problem
Exactly.
is in a lot of states you can't pay cash. You can't give people cash. That gets tricky.
Oh,
Yeah, because then you are a pawn shop.
oh, right, yeah.
Yeah, and you have to like make sure the items aren't stolen and It's a whole big pain in the ass and a lot of liability.
Yeah, I remember doing used gear for Guitar Center was a pain in the ass. We'd have to submit all the serial numbers. Like you had to document so much stuff when you got a piece of used gear, and we would pay cash, but it was a whole process. And we've had some things get taken by the police when they were found out to be stolen. Um, yeah.
Hmm. Commodities are starting to look a little spicier.
Yeah.
No, not oil.
Of course not. It's oil.
Yeah.
I feel like long energy is about to become the thing.
We're getting there.
Like nat gas can't stay this cheap for much longer.
Why?
I don't know. I don't want it to.
How's Lily looking? Let's take a look. Oh, all my charts got deleted. So,
Did you do the thing?
yeah, but it deleted all my charts, so I gotta go back and remake them.
Those sons of bitches.
Ah, fucking motherfucker. Yeah, you're telling me.
How's Tootsie Roll doing? That's the real question. Ooh, I got out at the right time, didn't I?
The Tootsie got kind
Wow.
of hammered.
Dude, I might buy back in now. Actually, I'm gonna wait. I'm gonna wait a couple weeks, but I kind of want to buy some Tootsie Roll again. This is what happens during recessions with Tootsie Roll is it gets super volatile, but you can profit off some pretty big swings on it. And if you end up just holding it, right, if you end up with a bad entry, you can just hold it and then it'll just go back to that price at some point because it never actually really goes down. Damn. $38. Not bad. I think my buy-in price was 33 last time. Something like that. Yeah, around 33. So I got some time. Why did it get hammered? Were the earnings bad?
I don't know.
Operating income down 40% year over.
People stop buying Tootsie Rolls.
Other net. I don't know what the fuck that is. Random shit. Liabilities down, so that's not bad. Assets up slightly. That's kind of good. Cash and equivalents down 56% year over, so that's kind of crappy. What else? What was their EPS? 19 cents EPS. Okay, yeah, that's not the best. Quarter over quarter, that's pretty shitty. It's 50% drop in EPS quarter over quarter. So that's probably why it dropped so much was the drop in EPS.
Okay, so Lily had their dividend on Friday.
Ooh, yeah, Tootsie. I don't know. I don't know if I want to buy Tootsie Roll anymore. That earnings actually was kind of poopy.
All right. Let me look at Lily's fucking. I picked up some more puts on Friday, but I haven't looked at the data from the weekend yet. Man, it sucked too because they had like kind of garbage earnings, and then they got that fucking news about the FDA trial like 2 days afterwards and rocketed overnight. Okay, it looks like the call interest is starting to fall off. This one usually takes a while. The biggest problem with Lily is the spreads are awful.
Well, it
But
doesn't seem to have a lot of volume.
looks like it got like almost rejected off Gamma Max on Friday. Delta neutral went way up going into Friday morning. Delta neutral's at 403 now. Gamma neutral 385.
403 is the bottom of the gap from earnings, or not
Yeah,
earnings, the FDA announcement. So that's
yeah.
kind of interesting. What's Hang Seng doing today?
Yeah, Vega and Charm exposure falling off too. So newer dated calls that were capturing the run are starting to close, I think. And then people are selling calls on it. So that might help narrow the spreads down a little bit too. Yeah, it looks like Gamma and Delta are both starting to come down. So probably a couple weeks, but if the market pulls down hard, Lily's very index exposed, so that'll help. But it looks good. Came down Friday a little bit. Pulled back $1. Starting to
Ooh,
break back down towards the trend.
Dirk.
What?
Here's what I'm looking at now for the data print that I think might turn things a little bearish.
Where?
The Red Book Index.
Really? No one ever gives a
I
shit
mean, have you
about Red
seen it?
Book.
It's dying. It's very tired. It's almost negative again. And that's I feel like that's a pretty decent indicator of being in a recession, right? When it's below zero.
Yeah.
I mean, it also shows the spending habits of Americans is quickly shrinking.
It's also like merchandise retailers. So I don't think it factors in e-commerce.
Oh, okay. That's interesting.
But I mean, it's doing terribly. I agree. I don't know how good of a recession indicator it is over the long run. It did trend towards zero back in '08, but it also, stayed just above zero for most of the decade following that.
Yeah, it's true. Yeah, it only really kind of dropped until like into like 2010, I want to say it was.
Yeah. I think it's only got data back to like 2004 or something like that. 2.5 trillion CRE debt maturities in the next 5 years, by the way.
Isn't most of that super front loaded too?
No, most of it's in 2027, but there's about 400 billion maturing this year, and another almost 500 billion next year. Then
Okay.
'05 or 2025 through 2027, it increases each year. Like up to
Okay.
like I think 2027 is about 5.5 billion. Outlook for tomorrow and Tuesday. I don't know. I'm still doing research.
Up, down, or sideways?
I
Is that
mean,
walking asset? It is.
it's probably walking.
the Continental. That's walking right.
What are your
Have
thoughts
we?
on real estate right now? I've heard from people on the inside 1033s are propping the market right now. It's a bubble about to GK. I wouldn't buy a house with someone else's money right now. Well, that's not true. I would definitely buy a house with someone else's money. I wouldn't buy a house with my money.
I wouldn't buy a house with debt. All right now.
Yeah. I mean, even cash, even a cash purchase is a terrible idea. The fucking housing prices are still sky high.
Yeah. No, like it's like we're still. It's such a weird
Thanks to
point, isn't
Mask.
it? Like we're like we got such crazy high prices on you know, goods most likely purchased with leverage, yet the cost of leverage has skyrocketed, right?
Yeah.
Like I don't know how long this can be sustained, right? This is kind of like the slow burn part of the issue where we have to see these people getting loans, getting squeezed, but they have decent jobs and good income right now, so they're all exuberant.
Yeah.
Everyone's so fucking exuberant.
I
Like
think I think there's a pretty good chance that I don't know. I mean, like, have you looked at like the like the Philadelphia like Fed recession probability thing?
not in a while.
Oh, yeah. I mean, this is like the most anticipated fucking recession in the history of recessions without one actually occurring. So I think like everybody expects a recession, right?
The market should
I
have
mean,
inversed
the bond
itself.
market's pricing in 100% chance of recession by 2024. But like what, the
Yeah.
most mild recession ever? I mean, economists are forecasting annual growth to be at like 1%. So it's like,
Well, the funny thing is the stuff coming out of both sides of the mouth is interesting, right? Like on the money side, with people, putting money in, they're saying shit's gonna go kablooey and we're gonna have a recession. And then on the other side, you got people, it is the most anticipated recession ever, but like you got people on the news saying it's gonna be mild, it's gonna be a breeze. We're gonna be just, it's gonna be a little tough for a second and then we're gonna be good. But like if it's so fucking anticipated and it's staring you right in the face, does that mean that it's going to be mild, right?
I don't know. I mean, are economists ever right about the spiciness of a recession?
Or anything?
Yeah, well, I mean, so what do we look for? We look for, I mean, the like NBER is going to tell us after the fact, right? So they'll tell
Yeah.
us once the recession's over. Um, Unemployment 5%, 0.5% to 3.9,
Yeah.
or the yield curve uninverts.
The yield curve starting to de-invert with that
I
alone
know.
could cause a lot of financial stress.
I mean, that's probably going to trigger the recession before, well, yeah, that'll probably trigger the recession before unemployment.
Yeah, because if the yield curve is de-inverting, that means that bank lending, right, is starting to equilibrate and have some sort of snapback effect, and that's going to be gnarly.
I think we have like 6 weeks.
You think so? That's
Yeah,
soon?
about 6 weeks. Yeah.
I don't know, man.
Worst case scenario, we get an actual debt default, right? Like a 3 month debt default. We see probably really low probability though, but we see like 20 to 35.
I mean, if the
A
3 month
P, like if
default,
we hit the trough PE of 15 on S&P 500.
what would S&P downgrade the U.S. Treasury to if they defaulted on the 3 month?
We were looking at like trough earnings at 170, 170, 170, 173. That's worst case scenario though, right? Like that's the absolute worst. So you see a 46% decline in S&P from where we're at now. Roughly. It's consistent with the bond market estimates.
So I'm chasing, but 3 month CDS.
1 year.
Ooh, spicy.
Yeah,
I
look at the 1 year CDS, US CDS.
was talking about full porting.
Oh.
Stop talking about fucking CDs. I want credit default swaps.
So I think that puts our median decline at like 11, like a median decline at 28%, which is roughly our low from 2022, right? Like that would be 38% from the S&P 500 high. I think we get a recession in the next 6 weeks. I don't think we get, especially if the debt talks remain unresolved. I don't think we get a 50% drop in the next 6 weeks, but we get a recession.
That's another funny part of this whole thing too, right? Like we haven't said we're in a recession yet, but then the talking heads also say like we've had the earnings recession, we've had the
Really,
the
because
margin.
like all the bank analysts are still expecting an earnings contraction. All the CEOs are expecting an earnings contraction. I mean, even
I'm
on
just talking.
raised like forward guidance, all of them still are predicting like 1 year contractions, right?
Yeah, I'm just mostly talking the narrative push by the talking heads more than anything else,
Like
right?
on CNBC.
Yeah, well, I
Yeah.
mean, they're just saying it's all past tense, but then it's also like we have all these different, flavors of a recession that we're talking about that have come and passed, right? Even though they may not have, like, they may have come, but they may not have passed, but they're talking about them like that. And I'm like, okay, so we've got like one, two, three different little flavors of recession that have happened, yet we're not calling this a recession yet. It just kind of like logically, it doesn't make much sense to me, right? Those are big signs of a recession when you have those things happen, like earnings compressions, the growth scare.
Yeah. So what do you think? Do you think inflation expectations are decoupled now? I think they might be.
Yeah,
With the Michigan Consumer Sentiment Report, I think that, I mean, provided that data point holds, right? Like that preliminary data point holds.
yeah, I feel like it will. Um,
Because I
I
mean, like, we're gonna need to start seeing a repricing of June interest rate swaps, or like the SOFR swaps, right?
yeah,
Because they're pricing inflation way too fucking low right now, and then September's pricing even lower, and we're just nowhere near there, right? Like, I mean, and then the month over month is constantly increasing and or staying stagnant, which means there's no, we're not furthering a reduction in inflation, right? We're beating year over year, but that's irrelevant if inflation's not continuing down.
yeah. Well, I mean,
And
and
like
just goes.
Kashkari already came out and said what, like 5.5, and was it Bullard that said 5.75 for a terminal rate?
if those inflation predictions are correct, like at this point, like in June, inflation's supposed to go down a ton. I mean, like that would mean there's going to be a market crash in June. Essentially, I mean, in order to get inflation down violently,
Yeah, I'm
it
okay
doesn't
with
happen.
that.
Things are awesome.
Well, how about we just default on our debt in like 13 days? What's the Treasury General account looking like at the end of the week? We should have another data point on that now.
Oh, you're right, huh? That's WT Regen, right?
Gal.
Gal.
Ooh, fuck.
That's bearish.
It's supposed to be filling up right now. It's fucking tax season.
That's bearish on the dollar. Everyone
Yep.
deferred, didn't
Yellen's broke as fuck right now.
they? I bet everyone fucking deferred because
Munis
they're
are
on cash.
hold up. What's this gaff? Munis are ticking up. RMBS is increasing issuance. Inflation risk priced into with an ordinate wall, and spread terms with tranches are still solid. NSROs are still plugging similar mid-risk model. Interesting. Yeah, I don't feel like we're gonna get like a tail event. Like I don't think we're gonna get like a crash, but like I think equities need to correct steeply. Um and probably soon. There's no flow. There's no flow into equities. There's like a fucking $6 billion into US treasuries over the last like 30 days and like two billion into equities.
And there's no flow around in assets either. I mean, there's a lot of correction that needs to happen right now that hasn't. The spring is pretty tightly wound on the housing market and on the auto market still even.
I mean, I think right now everyone's still pricing in the expectation that the debt ceiling gets resolved quickly. But if it
I mean,
doesn't,
yeah.
that's a crash. Like my issue is Yellen's projection correct? Because the Treasury General account doesn't support her narrative of having until early June.
One more bank failure and she has till 2 weeks from then or 1 week from then. That's like
They got to make
this is
another. They've got to make another interest, like a interest rate payment.
that's right, huh?
Mm-hmm. That's gonna be a lot of fucking money. I agree. I think they're most of the mind that the debt economy will outlast it as long as they can push the expiry outside of 2025. This would be on the other side of equity risk models. Yeah.
Gaff's got a point. If an unemployment doesn't ever spike, then that could work.
Hmm.
I think that's kind of what all this is hinging on is that super low unemployment number, right? I think
Yeah,
that's
but
like
that unemployment number is gonna get. It's gonna ramp up. I mean, with the lending restrictions tightening, it's gonna ramp up so fast when small businesses start cutting employees, right?
yeah. Didn't we also
That's gonna
see
have a lot more effect than like big tech cutting into their massively inflated headcounts. And those lending restrictions are gonna hit like small businesses hardest.
Yeah. Well, initial claims did tick up. Uh, Most recent reading.
I need to look at services PMI. Is that why the Fed's so fucking focused on their like super CPI or whatever the fuck they're calling it? Super core, which is just services. It's just services CPI.
Yeah, services CPI has been. I think that's kind of his biggest pain point is services. It was kind of like the last bastion of inflation yet to really kind of get resolved.
Fucking, I hate the buzzwords, man.
Yeah. You know, Theta Decaying Corpse, uh, you're kind of not wrong. So yeah, there's a lot of front loading in the volatility market right now in SPX. Because of all the uncertainty, no one wants to take a longer dated position because the risk is too high.
Yeah.
So that's why zero DT has been exploding in popularity, especially like end of last year into this year.
It
Really ramped.
fell off hard with the haircut.
Yeah, that's true. All
It's like,
options
what, we
got.
can't use these toxic bank assets for margin? Fuck.
Yeah.
Becomes much more problematic just lower though. This is actually nuts. Define correct steeply versus a crash. Like a 20% correction over a quarter versus over a few days. The problem with steep corrections is they cause fear, right? In a more tangible way than a crash does. Crashes cause like instantaneous fear, right? But like corrections over a significant period of time cause dread.
Yeah, if there was a
They
crash,
tend to not recover. Like crashes tend to recover really fast.
Yeah.
Like big long-term corrections, not so much. I mean, look at 2022. And 2022 was, and all the way into October was a pretty steep correction, right? But I think we bounced back a bit too soon. Huh?
Even 2000, yeah. There's
Yeah.
kind of see it started off as a steep correction, and then the dread set in, and then that's when it just kept going down, right? So where dip buying is not necessarily the strategy I would use versus a crash where I'd buy like an idiot in a crash.
Well, all right. So for tomorrow, we've got fairly split. We have fairly split gamma on SPX. We got gamma neutral moved down. Fast gamma stayed solid at 41.2250. We have significantly more put interest, but it's very spread out. Like put interest for tomorrow's expiration goes all the way down to like 39.60. With the highest concentration at 40.50 and 40.75. And then on the call side, there's quite a lot of interest at like 41.20, 41.30, 41.40. So it's gonna be an interesting. If it starts to fall, and we slip gamma like the fast gamma, that's gonna put us pretty deep in the in like the negative gamma range.
Well, especially if we assume those out of the money puts are sold.
If we look at the longer dated, like 519 expiration, the only real long interest anywhere near the money is at 41.20. And it's a decent amount of it, but that's like all there is. Everything else is to the downside. 40.75, 40.50. Over all expirations, yeah. I mean, we got 40.50s elevated, but I think it's mostly sold now. 41.20 is strong, like a resistance, but there's no upside interest. And then, yeah, put interest is building at several levels. 75.50, 4,000, 39.50 starting to pick up, 3,900's picking up. Don't forget we have the JPM collar at 38.85. If we get anywhere near the low end there, they're gonna push. Like every bear in existence is gonna push for the top of that collar, or the mid of that collar. Walmart and Target earnings this week too. Yeah, those will be important. What will make them have to stop propping it up with short-term contracts? I mean, you create more and more tail risk as you do that, right? They've already pulled back significantly on their like intraday call buying. It's fallen off by orders and orders of magnitude over the last since the haircut occurred. So there's not nearly as much call buying as there was. The bigger problem is that like the market's supported to the downside by all those sold puts, and they've defended them. About half of them, well, not half, but almost half fell off on Friday, and then a big chunk of them fall off this Friday. But we may push below them. They may just capitulate before then, right?
I feel like the thing that'll stop the zero DTE manipulation also is just more long-term certainty one way or the other.
Well, I mean,
Well,
don't forget like the massive amounts of like Vega and Delta with like longer dated puts starting to come in, and they have been coming in. More and more longer dated put positions are coming in, and that's gonna skew the market maker hedge far more than zero DTEs will be able to push back against it. And they're already losing ground, but it's very slow. Well, the biggest concern at the moment is liquidity risk in the tertiary. Funds won't pick up third-party junk bonds without significant yield in play. So the recent tick in HY is basically an insurance against fixed income liquidity issues seen in 2009. Okay, that kind of makes sense. Interesting. There's about to be a lot more liquidity risk if we start seeing large drops in commercial real estate pricing. Also, just more rate increases, right? You expected the usual 200 to 300 BPS SLD drop. Welcome back to Cornichon, Hazy. I have my chart done for SPX. So I mean, this is kind of where my expectations are for this week. Obviously, in the days leading to SLD, I think the upside remains open up to like, this is like fucking 4164 roughly. 41, yeah, let's just say 4165 because that's more likely. And then, you know, our really important range is going to be those 4100 sold puts. Breaking down enough through those and capitulation of those will have to occur before any more significant downside movement occurs. But from our current price, an SLD drop of 200 basis points would see us at around 4140 and 300 basis points around 4000. But remember, in the last SLD that we met in a similar situation, kind of trading sideways, right? You know, we got that initial drop from, was that Tuesday? Yeah, so from Tuesday to like that Friday, we got like 132 BPS. Then Monday we had like a small recovery, and then we went down into the like OPEC settlement period. That's when we realized like the other 200 BPS, right? So we went down like 130, bounced like 50 back, and then went down 200. I think the total move over the entire time period was almost, yeah, it was almost 300 BPS, but not quite. Yeah, I don't think my expectations are different here. There was a margin haircut, so there may have been, you know, this period here, like after the margin haircut, there might be some rebalancing of margin, and there might have been like emergency deposits made with FINRA because, you know, like the new SLD regulations from 2022 allow for that. So it's possible, but I still think like we haven't seen a lot of equity sell-offs in these upper price ranges. Yeah, CABS is a dark spot no one wants to chat about at the moment. When Blackstone defaults on more commercial properties. Who else is defaulted now? It's Blackstone, Prudential, someone else.
Yeah, I
Fuck,
saw a list somewhere on it.
yeah, I just read about it too. Happy's Mother's Day, and thanks for doing the stream. Thanks, Yaga. Eventually, the fund's moving positions from long-term contract strategies to zero DT strategies will run out of money to inject to increase leverage over the short term. Well, I mean, you kind of fuck up the convexity of the indexes when you buy too much, like when you buy too many like out of the money calls, right? And like over time, that leads to like more and more tail risk because you have to they're crediting, those are credit positions, right? They're selling long dated puts, buying short dated calls, right? In order and then like, as long as they keep doing that, the market price floats above those puts and they continue to decay. But now we're trading like right at those sold put positions, right? And any downside is gonna hit their risk. And if they pull back that risk, that's a massive amount of hedging that the market maker is just gonna sell off, right? Hazy's always something. Pigeon Whale, Cornichon, Dillionaire. I don't know how he makes the determination. Who needs dark pools when you have zero DTEs? Fair. Expiration date are the puts building up at? Well, there were a lot that expired this Friday. There's more that expire, well, last Friday, and there's more that expire this coming Friday. But I mean, if they're pressured, they'll close, right? They did last time. We had them at much higher levels. We had them at like, where were they, Torque? It was like 4140 all the way down to like 4100, and those got obliterated back here on these two drops. Like those all the positioning above 4100 that was there, and there was quite a lot, like all the way up to like 4150. All of that got destroyed. And then below 4100, there was like 4100, 4075, and 4000 is the biggest pile. So I don't think we'll break 4000 right now because this is still massive, and I think a lot of it's further dated. But we could very easily like break down the like 4075 and 4050 levels.
I'd like that.
Yeah, I would too. That'd be good.
I could maybe reposition my put. That'd be nice.
I can't imagine them holding out on 4000 if we broke down through 4050, frankly. The risk would be enormous at that point.
I mean, either, I mean, it could be, but it could also be for them even a good opportunity to reposition as well. I mean,
yeah,
depending on their theta exposure. If they have very little theta exposure, I think it'd be a great opportunity for them to reposition more appropriately, which could lead to a bounce. But it all depends on the long short that we can't really discern from gamma charts.
I said Blackstone, BX, right? Wait, which one's BX?
I seem to remember you saying Blackstone.
I thought I said Blackstone. I definitely meant Blackstone.
Yeah, BlackRock's gonna be fine.
Gaff, when give me insider information on Blackstone? What do I need to do? How many Kava gift cards? Columbia Group? Oh, okay. I'm gonna take a look at MLKN. I mean, not really, but I will. Wait, I need to keep this open. Miller Knoll, 4.6% yield. Market capitalization. Shares. What's with the profit margin decline? They just stopped making. They just stopped making money. Oh, because there's no more fucking offices.
At that such a low price, it's a good straddle, I think.
Their margins have always sucked.
I sucked extra.
Well, yeah, now they suck extra. The fucking North American Furniture Solutions? Oh, they don't do that anymore. Never mind. Do you know the maturity on their non-current liabilities? Any chance of us filling the gap at 420? On SPX? This one? Probably not. This is the upside of this is like just fucking massive pile of sold calls. No one's betting on the market above like 4165 right now. Maybe in a couple weeks, but not right now. Yeah, I kind of hate going long anything right now too, but I would want to know more about their liability maturity. And I mean they're trading at a discount to book, which is cool, but cash flows haven't really recovered, right? Um, and at all.
Couldn't you buy 100 shares and then straddle?
Yeah, we could
I mean, it's
like
still a bit of
100
a loss
shares and a
amount, but
protective put.
yeah,
I don't know if it's like worth buying a put on, right?
well, because the IV is so high right now. Yeah,
Is the IV really high on it?
I don't know. I mean, you could also you could mm, you could buy 100 shares short a call, but the IV on call is probably shitty. I don't know. I haven't
How
been
long
interested.
can they? Well, here's my bigger question: like, how long can they sustain the dividend? Right? Like, they've got to just cut the dividend and start like making acquisitions or doing something smart with their money. Because the dividend's fucking stupid at this point, right? They have no growth. Their cash flows suck. You know what, Poopy Pants? If they cut the dividend, maybe it's a buy, right? I mean, obviously, wait for the initial shock of them cutting the dividend, but if they cut the dividend and maybe maybe you're gonna like focus on some sort of growth. I don't know. Then it might be worthwhile. I thought I was playing
So,
CSP on the dividend cut news. Okay. Yeah, the 4%'s goofy. I mean, it should just be zero. They have no fucking they need to focus on growth, not
so
giving their
15
shareholders all their money.
so a $15 protective put is about $1.50. Well, spreads $1.10 to 235. You could probably get a fill at $1.50 or two, maybe.
Slim options interest, I'd imagine.
Oh yeah, super duper low. There's 10 OI on the December 15 put. Nobody cares about this thing, but I mean, if you have the intent to exercise, right? I mean, who cares?
Yeah, I guess $1.31 risk on a buy-in. I mean, you could short strangle it. You could like sell. Does it have 1650s or just
It's got 1750s next strike up.
does it have 16s?
No, it does 250 increments.
Okay. Well, why wouldn't you buy a 15 put? So buy 100 shares, buy a 15 put, sell a 15 call.
Yeah, I think that sounds good. I mean, that'll help you reduce your theta exposure on the put.
Yeah.
But upside is pretty limited though.
What if they issue the dividend is new fake shares with 10-to-1 issuance under the ticker MKDS, and then the CEO posts some nonsense on Twitter about chicken nuggets? Bullish then. Absolutely.
I mean,
Gaff
in the current
Gaff
market we're in,
loves
yeah.
ApeCoin so much. For Gaff, it's the penultimate financial instrument.
Well, ApeCoin is the bridge between the equity market and the crypto market. It is the ultimate connection.
It's the most centralized currency. Um Seems like it's getting more difficult to break 4140, 41.5. If 4160 really still in play, or is that just a hypothetical? It's the bullish range, right? Like I mean, like I have the break point for the bullish range above 4140, right? We haven't spent for the last like 2 weeks. Well, yeah, almost the last 2 weeks. We haven't stayed above 4140 for more than like 30 minutes, right? Um yeah, I don't think that we're gonna hit this, but yeah, I mean crossing over 4140 with any kind of momentum is bullish, right? You'd want to be, I mean that's what these levels are supposed to define, right? This is the neutral range. Moves to the upside of like fast gamma increase in bullishness the higher it goes up, right? This would be like the failure point for the bullish side. But like if it crossed 4140 with momentum, you'd probably want to see if like, you'd probably want to get calls. And, the same is true to the downside for puts at 4100. But it's just supposed to help people define trading ranges in a easier way. I made it more complex at one point and then nobody understood it, so I've fallen back to a more simple. Maybe it's an oversimplification. We have a double gap to the downside. That's bearish. It's two gaps, Dork. I claim no such knowledge. What if they issue the dividend as green by calls, red by puts, orange straddles? Gotcha. I mean, kind of. Last week we basically just stayed in the orange range. We didn't really go anywhere. Like we dipped into the red a couple times, but yeah, we mostly just stayed in the mid range. It was fun intraday, but shitty for long term positions, both long or short. We have a gap from 45,000 to 12,000. Yeah, it's not gonna fill right now. It was gross. I hated last week. Really, I loved trading last week. Last week was fucking awesome.
Yeah, the intraday was cool, but the theta burn on long dated shit fucking sucked.
Yeah, it was hard. I'll admit it was hard to keep up with the theta burn, but the fact that everything just stayed so range bound and continued to like the overall trend remained bearish, right? We still closed the week lower. I think pretty decently too, right? Like, well, no.
It was pretty easy to buy calls at the bottom and puts at the top.
I guess over the last 2 weeks we've lost 100 BPS. That's
Yeah,
kind of
dude, this
it's
is
kind of shit.
I
But
mean,
I mean,
technically,
it's more importantly though, it's breaking down, right? Like we're gonna find liquidity, and we're obviously gonna find it to the downside, not the upside.
yeah, no one's buying.
Yeah, there's no buyers. It's because it's a bear market, regardless of what Kramer, Bob, and Jackson say.
uh,
Boring markets are only fun markets to people already in the money. What if you're just forever out of the money? You just short strangle everything.
I mean, Gaff, I made money on out of the money shit in the boring market. Then
I'm not
again,
I'm not using a gap indicator. I just drew them like a kindergartner. No, most of the gap indicators kind of suck. I don't like very many of them, so I just draw them by hand. It's not that hard to do. I do like that a 300 BPS drop puts us at the 4,000 mark. Maybe test 4,000, move up through OPEX to like back to like 4080, and then when SLD settlement starts to come in, drop off more into like CPI, PPI, the next Fed decision.
I haven't checked in a while is where SPX is relative to its 52-week moving average. I don't like put much bearing on it myself, but a lot of traders will buy on a test of the 52-week moving average.
We can
Maybe
look.
I see my numlock. Why does numlock turn off ever? Why is numlock even a key? Who uses those keys in the thing? Douchebags, that's who. So the 52-week moving average is at 39.6709. So I feel like that would be close to the bottom of the range, if anything. If we did get a correction, we'd probably get a pullback there.
4050?
39.6709 is the 52-week MA close last week.
What time frame are you looking at?
I'm on the weekly with a 52 candle moving average.
Oh, okay.
Yeah, nothing crazy.
Yeah, 39.75. That puts us right below all the gaps.
Yeah,
But if we get anywhere near the fucking JPM color, everybody's gonna push.
it could be a failure of the moving average, which would be super bearish.
Well, we failed it a couple times recently, right?
Kind of, yeah. And we had 500 basis points on the test, and then the last failure, another 450 basis points. August test, obviously super bad.
Yeah.
But there's been a test in November. There was a test in January. There was a breakout in January, but it failed. And then there's a breakout in March, and it looks like it's starting to fail.
I like the head and shoulders on the weekly.
Yeah, it looks really good. I mean, depending on you talking about the head and shoulders from November or December 2021. I
It's
like
just
that one.
it's just a bear flag.
Yeah. All of ever since 2021, this whole thing has been actually, I guess since like 2022, this whole thing's kind of been a bear flag.
Yeah.
But it is SPX.
Correction, boring markets are only fun markets to people already in the money and those who like skydiving without parachutes.
What's more like it, Gap? That's definitely me.
I remember you saying you were watching VIX one day. Were you able to make out anything? It's moderately useless.
Well, Kirk, is yours delayed 15 minutes on TradingView? I find that to be very
No,
annoying.
I have the live one.
Did you have to pay extra for live one day?
Yeah, you do. It's a different data package. But
How much is it?
now I have live VIX futures, which I didn't have before, so that's cool.
How much is the package?
I think it's like $3 or $2. It's not expensive.
Well, that pushes back
Here's your VIX
my
one
Dillionaire
day.
membership right here.
It's
The
$4 a
one day,
month. Thank you, NW.
the one day is only really useful for that day, though, isn't it?
Yeah, it is.
Kind of interesting if it trends, though. I don't know what a trend in the one day would mean, other than I guess you could use it in. You couldn't do TN obviously, but like you could use a trend in it as an indicator of some sort. But I doubt this thing will trend.
Well, it doesn't open at a fixed level, right?
Yeah.
So, I mean, yeah, it could trend potentially. I mean, you have like a few days here where it's trending at the beginning of
Yeah.
May.
That is interesting.
I remember saying you were
All right.
watching. Were you able to? Yeah, I don't really know if we've made out anything about this. I think it's useful. I think it's useful for watching like intraday put interest or put accumulation. I think more importantly is where it opens. Like, if it opens way down after a bearish day, that means like a lot of 1 DTEs are going to get priced down, which could, force capitulation. But outside of that, I really don't know how telling it is about anything. I mean, yeah, I guess it shows us some put accumulation throughout the day, and then like maybe open can indicate put capitulation on the like 1 DTE expiry that's opening as 0 DTE that day. It may have an effect. You know what it may have an effect on is the AM expirations, but I don't know if we haven't really seen enough of those yet.
I feel like it's a decent indicator of options market liquidity.
Yeah. Or interest, maybe just interest, right? Like just like volumetric interest.
The same thing, yeah, for sure, definitely. Jake, this one tracks the 0 and 1 data expiry option.
0 and 1. Not a lot of capital is going into equities, Flocala. That's what I mean. So like, you look where capital is being allocated. It's not being allocated into equities. Most funds report their like outflows every once in a while. Banks report them more often. But yeah, most of their money's going into like fixed income, treasuries, bonds, like corporate bonds, emerging markets. You know what? A shitload of capital is going into emerging markets right now. Dork.
You know what? Long Indian rupee, bro.
No, I will not.
India is the world's largest emerging market, bro.
It's also a shithole.
So is every emerging fucking market.
I don't know. They've got a lot of political problems right now. I don't like it yet.
I mean, you know what?
5 years. 5 years.
All right. I'm just I guess India's balance of trade isn't that good actually.
No.
Yeah. It's shit. It's pure shit. Yeesh. Yeah, there's the overall net capital flows is going to be interesting, and then the long-term tick flows is also coming in tomorrow. So we might get a little bit of data from that in terms of whether or not people are risking on or risking off, right?
Yeah, I mean, I think most of the data we have so far just points to risking off, right?
I mean, yeah, you look at fucking bond yields and
Yeah.
equity price action alone tell you the people aren't risking on. Like the volume on SPY has been super weird. There's a couple days of crazy low volume and then pick back up, right? We had like 2 days of 50 million volume and then it just kind of came back up like nothing ever happened. And I think that was right around the haircut time.
I think Dixie's gonna keep rising. You might lose your bet against Poopy Pants.
I know. That balance was super important. So I mean, it's good because I have a put. I'm like not bummed, but like I'm like, ah, that was kind of what I was playing was that. So, and what that means though is that my bet with JFresh is at risk as well. I bet with JFresh that I think I said the 3 month was going to drop below what was it, like 4.2 by end of July.
Ooh, dork. The U.S. Fed's also pricing it. New York Fed, uh, is pricing in 68 point. Well, it's estimating, not pricing in, but estimating 68.22% chance of inflation for the 12 months ahead of term spread readings.
62% chance of continued inflation.
68.2% chance of recession.
Oh, recession. Oh, ooh.
Yeah. It's the highest it's ever been without an actual recession occurring.
I may actually win my bet with JFresh then.
It's almost as high as it was in the 80s. Well, late 70s.
Yeah, remember what happened in the late 70s?
Yeah.
I wasn't alive, but I heard about it from a lot of people that were alive. You know
Sucked
what they said?
balls. Unemployment
Yeah, they said stuff.
skyrocketed.
Yeah, like the gas lines at the fucking gas stations and shit. Like,
Well,
yeah,
that was also because of like production cuts and stuff, right? The oil embargoes.
that's true. Didn't OPEC just say they can't cut more?
Did they?
I think they said something like that's not like they can't
I mean,
cut more than
they can't really cut anyway, right? Like they have to maintain the same levels of production because of the type of oil that they fucking extract. Like they can never
yeah.
actually cut production. But when they say that, they're just like stockpiling shit to try to sell it at a higher price. But they have to like
Yeah.
continuously pump, otherwise their wells, fuck, I don't. Who gives a shit? Freeze up or something like that.
The dinosaurs get reconstructed and attack.
National financial risk subindex still low. Financial conditions index is still pretty low. I feel like both of these
I,
should be a little higher.
I
Financial
love that. Yeah, those
stress
are low.
remains below average.
I love how those are all low, but at the same time, we're like, bro, there's going to be a recession, more than 50% chance, bro.
Well, I mean, I feel like those are more worried about like bank failures, right?
Yeah, but you don't have a recession without financial stress.
Yeah.
I mean, and also we've also had several banks fail.
JP Morgan got such a sweet fucking deal on FRC.
I know. I don't want to talk about it.
$50 billion, and they're not taking on any risk for like 5 years.
Yeah, it's practically just like an accounting trick to them.
Stanford's latest study estimates that 50% of US banks are insolvent if they sell 100% of assets right now, which is about
I mean,
620 billion in unrealized bond losses.
I love all this stuff. I'm looking at uh, the 1 year CDS right now. I'm just looking at it. It's beautiful. I've been looking at it for like a few minutes now.
So that means uh so realized volatility is still climbing.
Yeah.
Have you taken a look at realized volatility? I mean, it's been climbing pretty consistently since it hit its lows, like towards the end of April.
Yeah, I remember I think we discussed that like just one of those random nights where we were talking about the realized volatility starting to drop, and yeah, it's continuing to go down, which should put well, sorry, it's picking back up after it went down, so that we were saying that was going to put upward pressure on VIX, um, but
Well,
I
I mean,
don't.
it started to put some upward pressure on VIX, but it should put more, right?
Yeah, I mean,
Like, I
obviously,
mean, we,
there's
we
yeah.
we've been moving up. Like the baseline on VIX has been moving up, but very slowly. Although the more realized volatility rises, the more implied volatility we should see.
Yeah, because the expectation of moves expands.
Oh fuck! Bernanke and Powell are having a conference on fucking May 19th on OPEX.
No shit.
Yeah. Give me 1 second. I gotta answer this phone call. I'll be right back.
Can I still talk shit? I don't know. Ooh, I can. Nice. I'm never gonna dunk on Jay Fresh for not showing up for something. He's got children. Have a good night, NW. I can't run the stream. I can just talk shit to you guys. You're never playing CPI again, Hestia? I don't blame you. CPI is CPI is lame. I just think like the IV crush just in the market every day has been so annoying. So trying to stay profitable on like CPI, I just don't I don't like the amount of theta you have to get to play CPI. I just don't like holding contracts with that much theta. It's a personal thing. Puts or calls? Yes. When MOAS? Uh, tomorrow. It's always tomorrow. Tomorrow. Bye, Gaff. Thanks for all the fun little insight you got there. That was really cool. Appreciate it, man. Dorking it? I'm never. I'm never going to be dorking it.
All right. What'd I miss?
I've been. Don't worry. I've been putting the stream on the back, talking shit with these losers in chat. Well, these losers in chat and Gaff. No, no cult. I don't want a cult. No, that's way too much responsibility. Carl's super busy, K-Mac. Like he's if he wasn't so busy and would stream, I would just absolutely let him. He's way more fun because then I get to talk shit to him in chat, which is I enjoy that much more. But if he's
Alright.
since he's so busy lately, I'll generally kind of throw a little thing on and let you guys look at my yellow and blue candles.
So failure of the Treasury General account puts us at 31.4 trillion debt.
34.1 trillion debt.
30,
Dead.
31.4 trillion in debt.
Oh, yuck.
It's a big default.
Why did we do this? Oh, I'm sorry. I'm reflecting on our behavior as a country over the past like decade and a half. It's so frustrating, man. Like, cause like you basically what we witnessed the government do is go buy a house, open a line of credit on the house, buy 3 cars, open lines of credit on the 3 cars, and then buy more houses with that. Like, just, ugh, gross.
When
Like, if
when
you're,
when automotive HELOCs.
I mean,
That's
we got
all I
80
care about.
insurance. That's not far off. It'd be an A-lock, right?
I own 100% of the equity in my mom's car.
Nice,
Can
bro.
I gamble it on zero DTs?
I mean, technically, you could get a signature loan with your car collateralized to it.
I'm not saying your name, but welcome to Dillionaire, man.
God damn it.
Hit me up on the Discord. I'll add you to the country club where hopefully you have a slightly less offensive name, or at least a name that won't be perceived so offensively. Is that how you spell that? How does YouTube? Never mind.
I'm just gonna go ahead and do this. I don't like the 88. That made me mad.
Well, I'm glad you got triggered there.
I'm not a big fan of anti-Semitism or racism. I do not like either of them.
Federal budget deficit 1.9 trillion.
That's par for the course. This is like, I'm not a Republican. I'll never, there's some things I agree with, and I think one of them is fiscal responsibility. As little as they talk about it now.
I mean, I'm reading through these analyst reports and they're so fucking mixed.
Yeah.
Yeah, I'd hate to be working a risk desk right now. Gaff must be just hating it.
Oh yeah. I mean, yeah. There's
Like no, you
I
know what
feel
it
like
is?
there's
Is nobody knows what the fuck is going on. They're all just making shit up.
yeah,
They're
uncertainty
like,
is as
no,
high.
this is totally cool, and then everyone else is like, no, it's gonna fail.
It's a coin flip. Like the uncertainty, I haven't seen like this is the highest uncertainty. Yeah, and I've ever seen in my investing career, and that only spans back to like 2017. Um, I like,
People were
and it's
pretty
not.
uncertain with the effects of COVID until they announced lockdowns.
Yeah, yeah, it's true. I guess I just didn't see the uncertainty. I did see the uncertainty there, and I didn't sell though because I was a
Man,
fucking
core
idiot.
is just locked up. Core has been between 5.7 for 5 months now.
Well, after June, year over year should drop, right? Because June had that big spike, so the distortion should equalize uh, in June, right?
Yeah,
So
but not if
that,
month over month keeps going up,
yeah.
right? Like our month over month has also been on the rise. So I think that's the problem. I think that's why people are starting to get really uncertain is that month over month keeps climbing.
Well, and it's not only that, but month over month keeps climbing while economic activity continues to show lukewarm, behavior.
Yeah.
There's really not a lot happening to like. It's not, this price rise is not being pushed by a massive spur in demand. I mean, don't get me wrong, people are buying shit, but they're definitely thinking about it now. But I don't think we're going to see a big change in consumer spending habits until uh, unemployment starts to rise. Either that or just people like start hearing news of layoffs, and employment going to like employment numbers going back to like 2019 levels.
Yeah.
That would I think really change consumer spending. Well, I mean at that point too, we'd have a lot of
I
unemployed people
mean,
that would.
there's a rule for like 0.5% increase in unemployment over like a 1 month period, right? It's one of the recession triggers. It's called like the SOM rule or something like that. I forget. Yeah, so Powell and Bernanke are discussing monetary policy at a conference Friday at 11 a.m. Straddles?
Maybe. The fact that he's hanging out with fucking Bernanke is bearish as shit.
I know, right? Yeah,
He's not
that's
hanging
the
out with
'08
the Fed
guy. He
president.
got a Nobel. He got a prize in economics.
What, for fucking everything up?
Yeah.
Uh,
Whizzle'em Teats. Welcome to Dillionaire. Thank you so much. Hit me up on the Discord. I'll get you added to the country club after the stream, man.
See, that's how you make a funny username that's not offensive.
This is when you know what we need to do? We need to live stream all our late night DGen 0 DTE planning sessions.
Oh my god, no.
Dude, we'll destroy the pickle jar in a week.
They'll be insolvent in a day.
So guys, have you ever looked at the returns on buying a 3,800 call at market open, or 3,800 put at market open on SPX? If the market moves 30 BPS in the first 15 minutes.
Oh my god.
Remember those? Yeah, but remember those ones we did on
strategy.
Apple where we made like 1,000% in 5 minutes?
That one was fun. I didn't make as much because I had way less data than you. Thank you, Gert Dork Absentee Carl.
Super C88 better. Yeah, you're good. We all know what it means. Thank you, Kirk, Dork, Absentee Carl, and JFresh, and all the other quants. Time to stop this hubris-driven gambling and make some incremental, continuous gains. That's really the way. The best way to do this shit is only gamble with money you make off of like income strategies and safer investments. Yeah, and then you take the winnings from your gamblings and you buy more safe investments and and invest more into income strategies, and you just keep doing that, and it makes, well, I would argue that it grows a lot faster than buy and hold.
Yeah, I never recommend for someone to do what I do with my money in the market. My risk appetite is extremely bad. I'm extremely greedy.
We've ruined you. You were supposed to manage our fixed income, and we've destroyed your risk management.
I still can. I know how to do it, but like the thing is though is here's the cool part is my risk management is actually getting really fucking good.
Your risk management on hyper risky investments.
Exactly. Right? Like I'll be ready for volatility, that's for sure. I have learned some good risk management stuff from losing a shit ton of money really quickly. Teaches you a lesson really fast.
Set stops.
Set stops set stops when you're ready to, and then if it moves against you really hard immediately, you should definitely just hop out and then hop back in.
Oh fuck! Somebody sold 150 VIX futures.
Yes,
Yes is about to rip.
Fucking mo ass boys.
I hate overnight trading so much.
I mostly hate chat's reaction to overnight trading.
So GME, I don't have any of the stuff pulled up because all my charts got reset, but GME still kind of looks like dog shit. I expect this week we'll see more shorting. The ETF FTDs are done, so like any incremental gains from that's over at this point. If there's an SLD period and we see a lot of market downside, GME will just come down with that. Upstarts, I don't know, maybe some T+2, T+5, or T+5 action. I'm not sure how much there will be. It's still not on Reg Show, which is interesting, right? As of Friday. And then Fubo might see some T+5 action as well. Fubo and Upstart look a little bit more interesting. Fubo's borrow rate started to go up, and it hasn't like liquidity hasn't collapsed or anything on it. I don't have any of the indicators pulled up, but I know what they look like. I already looked at them on Friday.
I think Upstart probably more interesting than Fubo in terms of volatility, but I
Yeah,
like where Fubo's at.
but the volatility on Upstart got fucking destroyed. Like the crush after earnings is like 30%, like immediately,
Fuck me,
day one.
that's
Yeah.
insane. How they can't keep getting away with this?
Oh yeah, sure.
They can though. They can keep getting away with this.
Absolutely.
Those
Although,
motherfuckers. But
but
yeah,
earnings was fucking awesome. I mean, if Upstart just wants to keep doing this for a while, I'm perfectly okay with that. Especially if I can buy it at like $11.
I mean their earnings were pretty good, wasn't it?
Yeah, it was decent.
I
It
mean the fact they had
beat
decent earnings for that.
expectations.
Nice.
They have like fucking solid management. You know, they're doing they're working hard to keep their company afloat.
I mean, so far they're one of the few companies I see. I mean, I guess other than like Palantir and some of those other guys, that's like working on taking AI and turning it into revenue.
Yeah. Well, I mean, they have been turning AI into revenue for some time already.
Yeah, yeah, it's cool. That's why I like.
One would argue they were the beginning of the AI bubble when they were trading at $400.
What's
Now
that?
win
I can't really
Nvidia
break it up.
16, dork.
What's that?
Win Nvidia 16.
Mm. Oh fuck. 2035.
Nvidia's starting to fail, actually. Yeah, I think Nvidia's starting to look a lot more bearish.
You think this
Technically,
turns into a
too.
head and shoulders?
I don't know if this turns into a head and shoulders, but we've already got a couple of days of consistent price decline. If that keeps up, we're gonna start seeing weight dumped in ETFs, right? Which is all it needs to start generating like serious downside momentum. And then everybody who's bought the fucking stock in the last month and a half is gonna sell because they bought above $260, right? Like
They're
idiots.
probably regretting it.
Yeah. If
I
I'd bought
mean,
Nvidia anywhere in here, I would just be selling like 220 covered calls.
the thing
Night,
is though, is
Carl.
if Nvidia drops, right? Oh, good night, Carl. Have fun. Have a good night. If Nvidia drops and the ETFs do start reducing weight in it, that could also have an effect on all the other big, giant, mega, super pump the market stocks.
I mean, Meta's starting to decline. Netflix kind of turned its shit around a little bit over the last couple days, but Friday was pretty rad. I should buy puts on
Netflix is
this.
way too Netflix is way too crazy about their stuff. I still can't figure out what Netflix is going to do about their account sharing and all that.
They pulled it. They like said they're I don't know. They like pushed it off to like next year because they lost too many subscribers from like the one market they tested it in.
Yeah, they're probably going to push it out to forever because it's a stupid idea.
Two Seeking Alpha articles being bear in Nvidia. Interesting. Paul Lowe, welcome back to Dillionaire. Thank you so much, man. Hit me up on the Discord if you need me to get you re-added.
What's so much better about this stream, Space Monkey? We're a little more chill.
Well, it's a better time of day because futures are open. Did
That's
this thing
true, but I mean they're
fucking
not doing
move?
anything.
Oh, I like that way better. Oh man, yeah, I really want to short the fucking double top on Netflix here. I did okay on the last set of puts I bought on it, but not like good enough.
Yeah, I feel like puts on Netflix aren't really that great unless it does correct super hard, but like there's not really I don't know. It's
I did
sentiment
get
shift in the market, yeah.
I did really
But
good selling butterflies on Google right after its like big pump. I sold like
oh
two
nice.
two DTE butterflies. Those were fucking awesome. It landed like spot on the money.
Nice. I can't wait to sell short vol.
Yeah, dude, Google's looking like it's. I need to sell some Google fucking covered calls this week too.
Oh yeah, 117. It's a great. I think it's a great price.
Yeah, I think I'm gonna sell them at 108.
Serious? Oh, dude, I
But
was
like,
thinking 115.
oh, I'm probably gonna sell like 90 DTE. I'll have plenty of time for it to correct down. Also, if I
Yeah,
sell them in the money and it drops, if it drops even $2, I'm still up, right? Because you're selling the delta.
yeah, it's true. That's not a bad play at all.
But yeah, I might buy some like 120p, sell 108. I like that.
How's Amazon doing?
Well, maybe 110. 108 might not be open as an expiry.
I forget.
Haven't?
Were you able to sell all your Amazon?
Yeah, I got assigned on it. Like
Oh, nice.
yeah, like a while ago.
Because it's I think it's
I'm gonna sell bear spreads on Palantir.
uh I don't know. Amazon's kind of in a bear flag, but it's pretty low. What on the monthly? Yeah, Amazon's in a fat bear flag on the monthly, but that's also
Yeah,
the monthly.
Amazon doesn't look great.
Yeah.
Like volume's increasing to the downside right now. Like volume started to pick up. Yeah, this looks like a reversal. Although it's hard to say how much. Like I don't know if it's gonna go back to 100 real quick, but it might.
I could see 100 in like SLD maybe maybe like 106. What is this? Yeah, 106.50 for SLD maybe.
Mm,
Correction probably 100 would be my guess.
I would say
As good as
104 or 101.
yeah, something like that.
Missed it though. Missed the top. I don't like playing it with the fucking risk that far away. It's like
Yeah,
$2 to the. I mean, I guess you could play it with risk at 110, but it's super tight. You probably just get stopped out of it.
you could do a you
Maybe I'd
could
wait
do
till Wednesday.
like a bear put spread.
Good debit spread.
Yeah, yeah.
Mm, good guess.
The debit would be kind of high though because it did reverse a little bit, but
Right,
I mean,
sell 95s, buy 105. Hold on, let me
yeah,
look at that.
that sounds about right. If you're targeting 105, yeah, or like 105, 100, like 90 DTE, something like that.
So sell 95, buy 105. Do sell 90?
Yeah, you probably have to sell a bunch of them.
I don't dislike this. Probably needs like July. I like July a little better.
Yeah, I was thinking more theta. Uh,
You percent of max risk at 100, and then anything below that's just free money. Profit's solid. I mean, if you can make it to expiration, that's the problem. Is you don't. I don't think you want to extend your expiration on the sold put that far. That's taking on a lot of unnecessary risk, especially right now.
I guess you could do a calendar spread at 105.
Oh, maybe, yeah. So do this like change this to June 16th and then sell these. Maybe sell these at like May 19th.
I think that looks better.
Yeah, I like that a little better. Less profitable. Well, initially.
Yeah. What was it,
But
net credit?
credit's garbage. Maybe you do like, since you're so close, maybe you do like 95. That's still shit. These are kind of garbage. These are 2. Yeah, this is just, I might as well just buy fucking puts.
Yeah, I was going to say, these puts are cheap. I might just, yeah.
Could do 105. No, that's still shit. Yeah, I think this is better done without the. Yeah, I don't like the. That's a little better. I guess you could do 100. And you cut
What's your vol exposure like on that?
really good.
Okay.
75 a leg. Uh, you hit 100% of max risk at 4% drop.
That's not bad. Yeah, you got, looks like you got
Shit.
sort of a couple weeks of goodness in it.
Let's do that, and then like, fuck. I hate that it doesn't let you add, like, add one.
Yeah, that'd be super cool if you could like stack them up and make like a new spread.
Yeah. Hold on. Sell 115. Sell 115, buy 105. No. Maybe you could sell like the short. Like you sell this. Wait, no, like this. Sell that, buy that. Uh, sell.
Ooh, sell a 100C, sell a 100P or 110P. Sorry.
Sell 100C.
Yeah, sell 100C, sell 110P. I kind of like that. Your vol exposure is shit though, so if vol picks up, you're kind of hosed and you got to hold it. But
I don't like that one as much. I like
in the
this.
into expiry, like end of May expiry though, it's pretty good.
I like this a lot.
Oh, sweet Jesus, yeah, that's pretty good.
You could do 12 and do a $3 spread. But the $5 debit doesn't seem too bad. And then you just
No,
get free downside exposure for June 16th.
yeah. I mean, if we're really in a recession, this is kind of a okay.
I guess if you sold it here, uh, could you buy one more put? Ooh, I like that a lot.
Okay.
Later, Stockspert. Welcome to Cornish Complex. Thank you so much, man.
Should I give Plex the advice?
So this is 91 debit. Max loss is 500, which is mostly credit. As long as it stays below 111 by 519, which is great, right? Because we have SLD. Then you pick up a fucking two 105 puts for $91.
That's pretty fucking good right there.
Yeah, and your vol exposure is awesome.
Oh yeah. That's a real nice curve.
10% drops, like 1200 profit. If it hits 90, you're fucking up like $2,500.
That's badass.
Yeah, I like this. I'm gonna do this.
All
All
right,
right,
Plex,
I gotta write all this shit up. I'm gonna probably.
you can pop off.
Yeah, I think so.
All right, I'm just gonna tell Plex really quick, reduce your risk. If you're burning all your cash and it's all going away, that means you're risking too much and you should probably chill.
SQQQ is not considered a holdable asset. It has
Yeah.
volatility decay. Cheap short with minimal theta decay. Hmm. Do you have margin? You can do that with margin with, like I guess you could use SQQQ.
Yeah, you could use, I mean, SQQQ is okay for short periods of time, but you don't want to buy it and hold it for like 2 months. That's kind of shitty. And
Not
it's
at the
that whole
moment.
thing where
Oh,
like,
okay, your WeBull conversion's on hold. WeBull's been supposedly like really backed up with margin conversions. Um Buy right SQQQ? Yeah, you could. But then you lose the purpose of having like a short, right? Like unless you time your buy right perfectly,
I
you
mean,
just get like
he's kind of
fucked
asking
over.
for that. He's asking for a unicorn in a way with that, a cheap buy right with minimal theta, or a cheap short with minimal theta decay. Show me where it is. Sign me up.
I
Yeah.
mean, you could like if he had margin, I would say he could do like a short put
Yeah.
butterfly where he's just like he's profitable the up or downside, but he's got a wide spread at the money.
Yeah.
That's really not affected by theta decay, and I think it should be credit positive, right? So you're not, but he doesn't have margin, so
That's
it's not
tougher.
possible to leg into it. Yeah,
Yeah. At that point, I mean, and without margin, like, if you want to go long volatility, like, it just comes down to understanding trading ranges and what you're risking and, what you should expect, that kind of stuff. Really, ultimately, I think that more so than Plex needs a play, I think Plex needs he needs a sit down with himself to figure out what he should be playing.
or maybe just a sit down to figure out like allocation and minimum like maximum and minimum risk thresholds.
Exactly. Yeah. Just that's it's really. I mean, I think that, yeah, just like a nice little sit down. Like I've had a few of these over the past 6 8 months where I would just, because I was really trying to figure out what my risk profile was, because I realized it was wrong with what I was doing. So I dedicated a lot of time to trying to figure out, like, yeah, what I was willing to lose, and like in a single play, what I was willing to allocate, my concentration risk, all those
Yeah,
things. It's still a really fucked up risk management profile, but it's definitely way more certain, right? Like I have rules that I follow fairly loosely, unless my gut tells me something, then I may bend it, but like I'd have to be.
it's hard to build that discipline, especially against the backdrop of like greed, right?
And the high volatility that's like been in the
And
market
don't ever
recently.
think we're saying like greed in like a judgy way. It's not. Everyone, including myself, is susceptible to it. It's
Oh yeah.
the emotion is pervasive. But like I would seriously consider figuring out like your maximum, like figure out how much capital you have to deploy, figure out how much you can allocate per position, figure out your maximum risk. This is where like 90% of people fuck up, Figure out the most that you will deploy into any one position. Figure out your maximum risk tolerance on that position, and figure out how much profit you would like to see from that position, right? And then,
Yeah,
if the position becomes profitable, start scaling out before you reach your target, right? Try to claw back your initial investment, get your capital allocation off the table, right? And then anything beyond that you can be greedier with. But you know, I see this probably more than anything else is that like people will be in a position and then they're more in the position, they're more in the position, they're more in the position. Then they're in the Discord and they're like, oh, 50% of my port is like one fucking options position, you know.
yeah, that's where you're definitely like getting greedy. It's one of those things where you have to learn to let go, learn to shift with the way things change, and never look back. Like there's every time I never feel better after I sell something at a profit and then I watch like it go 10x, right? I'm like, okay, like I get really bummed and greedy as shit. Like, past greedy me is the worst.
See, I don't
Yeah,
I
get
don't
rid of
get that way. Like I get bored when I'm like out of like an exciting play. But like if I made money on my play, I'm usually just super happy.
Yeah, I'm getting into that more and more, especially over the past like month or two. I've been just I just totally avoid kind of trying to look at it and see where things are at now as if I was still in the play. That's a terrible idea, right? Once you're out, you're out. If you're in, you're in. That's really it.
Thanks, BGZ. Yeah, and even if your rules suck, just make some rules and stick to them. You know, and if you're out, you're out, right? Like that's what it is. There's always another one, right? Every day brings new opportunity. You're never gonna miss the boat. Your lack of FOMO will rarely ever bite you in the ass. Um, and it's better to just avoid that than to. I mean, look at Wall Street bets. Look at the people who are on our short squeeze. None of them are consistently profitable over time, right? They're like, oh, I made 100 grand on fucking whatever bullshit penny stock they played that week, but then it's gone on the next bullshit penny stock, right? So don't be like them.
Yeah. Oh yeah. Generally, if you're not sure, you should definitely wait.
Minimal time with work, so super low return it is. Yeah, I mean, focus. There are like ETFs that are just short SPX, right? That you can like buy and hold. I can't that aren't leveraged. There's a couple of them. I can't remember. I know there's definitely one for Nasdaq. I
There's
think
covered call
Spy
ETFs
has
too.
one.
Yeah.
Yeah, there's cover call ETFs. Although buying cover call ETFs when volatility's actually volatility is pretty low. Cover
The
call
volatility is
ETFs,
pretty low.
yeah, cover call ETFs might not be a bad play. I wonder if is there like a CSP ETF? No, that'd be dope.
There's probably some sort of weird.
Maybe
There's
like
there's
a
all
bear call
protocols.
spread
Yeah.
ETF. I don't want cover calls. I want bear call spreads.
Yeah,
Um,
that's the cool thing about ETFs is you don't need to necessarily load up your margin. If you're willing to sacrifice a little bit of the returns on a short vol position, I'm sure there's an ETF you can find that'll do what you kind of want.
yeah, I agree.
They're amazing, but they're also the devil.
The emotion of banking 10 to 20% in a day on a play is much better than losing 80% on zero DTEs. This is true. This is very true.
Absolutely.
Yeah, and zero DTs especially, when you're playing those, you need to have well defined and refined risk management strategies because you have to kind of play them pretty fast and loose, and it's very easy to let your rules fall by the wayside as you attempt to 10 bag some out of the money call or put.
Or fight back a fat loss you take earlier in the day. That's the one that really will get you too. Is if you start getting concerned after you take a hit on a 0 DTE. Like that's the most dangerous point, I think.
I think
For
I
me
think
as
it's
a-
the opposite. I think it's when you're like on a hot streak and you're up like 300% on your port and you're like, yeah, I'm unstoppable. And then then you look over and you're like 40 contracts deep into a contract that's falling below 5 cents.
right. Yeah. It's kind of both in a way, right? Like any sort of thing.
Yeah.
You definitely have to keep an even keel with the 0 DTEs. It's like it's definitely a mindset as much as it is a strategy.
Yeah, I think there's very few people in here, if anybody in here, that should be trading more than a single SPX 0 DTE contract at a time. And the risk should be well managed on it, and most of that time that means that contract's going to close at a loss.
Yeah.
um
Oh
and
yeah.
and that's a good thing. If most of your SPX contracts are closing at a minimal, like 0 DTE contracts are closing at a minimal loss, you are managing risk appropriately.
Yeah. Quick anecdote.
There is setting your stop too tight. There are things that you can add on as you learn, but um not losing money is more important than making money always.
Yeah. Quick anecdote. On Friday I made a couple hundred. I think I made like $300 on Friday.
Mm-hmm.
But that also involved 4 or 5 losing trades on SPX 0 DTE
Yeah.
before I hit the one that was profitable. Like, and it was you find your entry, you get in, but that's just a good entry,
And
right? I
it's
mean,
also SPX 0 DTEs. So it's like if you hit a runner, right? You get the good entry, the market moves in your favor, and you hit that runner, it will pay for all of your little losses throughout the day. Like no problem. And then, if it's really a runner, it'll pay for itself and it'll pay for your next 5 contracts as well.
yeah, it's exactly right. It's like I said, it's definitely a mindset. You can't get caught up in anything on SPX 0 DTE. You really gotta be fluid as fuck. It's a rush, but man, is it risky as shit, and I would never recommend it to anybody. It's like South Park. I put that warning on SPX 0 DTE. Like unless you're an institution, if you're an institution, you can do crazy giant spreads on it. I think that's awesome, but like
Yeah, I'm
if you're
like
just
I'm
shooting
like
oddball,
even with like my like larger portfolios, it's still really easy to hit like risk thresholds on 0 GTs on SPX. Like even if I'm like actively like selling puts against my call position and like or like selling bull put spreads against like an open call position and like trying to like offset like the theta decay in the market moving against me. um even and that's with like a pretty decent chunk of margin available. It comes like really close to positional risk sometimes. And I also don't like copy my strategies on SPX because I can do probably crazier shit, and their strategies are different, right? Like I mean I can average down a loser from like a $10 contract down to like $21 contracts, right? And still hit profitability, and not everyone has that option. So
yeah,
don't try to do that. It's a fucking really 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 dangerous. And I'm also selling like like I said, I'm selling spreads against that. I can short strangle against that. I can do a lot of things to offset that loss.
yeah. Like you and I like have I want to say fairly similar positions just because I think we pick similar entries and like intraday moves, but in terms
Yeah.
of our risk profile and our positioning and all that, we have completely different strategies. You and I you should everybody should have their own personalized specials. Like your strategy is your baby, right? It's your baby.
Yep.
So treat it like such. It's an individual just like you. It's
Uh,
special. It's your
This
fingerprint in
this
the
this
market.
one old dude one time told me it's your sculpture, which
Yeah.
sounded super lame at the time, but it is. It's you build it, you make it, you put part of yourself into it, and it works for you because you did that. And that's why like people who try to sell you trading strategies and they're like, oh, just do this over and over and over again, it'll always work, are full of shit. Because just because it works for them doesn't mean it'll work for you.
Yeah, absolutely. There's every single position, is
I mean,
has
you
its
can
own.
watch five traders, and this is a lesson that I think that a lot of people in here don't get. But you can watch five traders sit down at a desk, look at the same stock, and all take different positions, completely different positions, and
Yeah,
how those positions are managed, and the risk tolerances of those positions, the approach to those positions, all of that matters, and all of that can work. Like each trader in the end of that, each of those five traders can be right.
yeah. No,
And
whenever I see
even
a
if all of their
position,
positions are wrong, like if there's a guy who goes long and prints, and there's a guy who goes short and you know and fails but hits his risk and cuts the position immediately, and there's a guy who straddles, or a guy who plays a range on it and enters like a condor or a butterfly, or there's a guy who sells uh sells theta, right? Like all of those positions can win, right? And yeah, hitting your risk is still winning, right? Because you enter the trade and you cut the loss immediately, and moved into the next trade. And like that guy who entered the put initially, like he can flip long and take the next leg up on the call side, right? He can reposition, and then recapture his loss and become profitable. So there's it's all about how you manage it. Options give you nigh infinite flexibility with where your exposure lies, and so managing them is the most important aspect of trading them.
yeah, no, when you look at a position someone's taking or something like that, you definitely don't want to just get into the same or a similar position. You want to look at it and say that's interesting, and then think about it, and then come up with your own sort of interpretation. Does your like there's a lot to consider. You should never follow sentiment or positioning in the market because you don't know everything. Neither does the person entering the position. So yeah, it's a whole thing, and Girk's absolutely fucking correct. Every good trader has their own way of doing things.
Yeah, I mean, like JFresh is like maxing out his margin account, selling out of the money spreads, which right now works really well. But that and it works for him because he understands options positioning levels, and like where he can avoid risk. But like he also, when you do that, you create like this big fat fucking tail where like your return on risk is really shitty, right? And so he's super exposed to like big overnight moves, um and so and like Dork takes like smaller intraday like spy strategies. Is it you're on spy now or SPX?
I'm still, I know, I'm basically degen on SPX until I only have enough free cash for SPY.
Okay, so DGen SPX till out of money, and then
Yeah.
like so but we all have, like, all three of us are working off relatively the same data, and if not the same data, the same analysis. Um, and so but we're all doing something different. Like I'm straddling every night. Dork's trading the intraday. JFresh is selling out of the money theta, like, and it's working for all of us, right? But it's it's you got to understand that, like, not everyone's going to be an intraday trader. Not everyone's going to um buy and hold. Not everyone's going to want to sell CCs and cover calls. So it's and what works for some people won't work for everyone. Um, and it's really about finding what works best for you and what you're best at managing. Everyone's got different time constraints. They have jobs, they have family, and all of that can interfere with your ability to trade. Like you probably can't be a successful intraday trader if you can only look at the market 5 minutes every 2 hours.
I think that so Plex. I think the most interesting thing I just realized this too is that you notice, we spent a little bit of time talking about positioning on Amazon or whatever and some other stuff, but like you notice Girk and I and I mean and every, JFresh too, and a lot of people too in the pickle jar, we like to not really discuss positions as much as like when it comes to like talking about risk management and stuff, at least for me, my eyes light up. Like I love talking about risk management strategies and when we do discuss a position, I'm more interested in where the exposure is, that kind of thing. Like the more not esoteric, the more holistic sort of aspects of the trade, more so than the position itself. It's fairly irrelevant to me, especially compared to like a risk profile or a profit curve. They're way more interesting to me than any sort of strikes or whatever capital allocation. Like that's I guess capital allocation to a point, but that's more interesting to me than discussing sort of which 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 position I should take. Like that's less relevant. Anyways,
Yeah,
that's
I
obviously.
think approaching trades from what is the risk involved versus approaching them from what's the profitability is a much better, it's a much better way to approach all of your trades and all of your entries, is to think, worst case scenario first, and then look at the way you plan your position from that point of view.
Yeah, and if like so, like my basic tenet when I'm trading the SPX zero DT is I say my price target is this, and I may still be out of the money, but this is my price target. If it goes past it, I set a nice tight stop and I take profit. But I also am continuously assessing the likelihood of that happening, and if that likelihood goes below where I like, then I'm out. I'm just out, right?
Yeah.
So I mean, yeah, if trading ranges change all the fucking time, and it's a pain in the ass, and you're gonna lose money when it happens, but whatever. There's always another one.
Yeah, and I mean my zero DT strategy, like generally speaking on SPX, is very similar to that. It's just a little different in that I have a range where I'll average down the position if nothing's turned against me. And then I have a range where I have, a stop, right? So like, it might be like X% of position allocation is my stop, and then like up until that point I can increase allocation. And then don't forget, this is something I see, I also noticed that a lot of people don't do. You can always buy into your winning trades, right? So like if your trade, like you enter a trade and then you get confirmation, you can then add to that, right? And that's actually better than averaging down, is averaging up into your correct, uh into your trade printing, right? You buy into that because you've already hit your confirmation and you're already right, and then you can add leverage because you're right. And I think most people only add leverage when they're wrong, and that's kind of the opposite of what you want, because you're doubling down on being incorrect versus
Yeah, for
doubling
sure.
down on being correct. So maybe something to take away into this next week of probably pretty volatile trading.
Yeah, always ask yourself if you're committing the gambler's fallacy whenever you're about to average in more into a position or increase your leverage.
Yeah, yeah.
I always ask myself that, and oftentimes I will say, yeah, that would be a gamble, right? Kind of like Dark Souls, you gamble sometimes. Is it worth the gamble? Like you really got to ask yourself. And if you are gonna gamble, right, it better be because your odds are good, not because your odds are shit.
Or you have an extremely deep understanding of what's about to happen, which is
Yeah,
which is hard to come by. So I would err on the side of caution pretty much always.
yeah, exactly. Yeah, for sure. Especially with vol fucking shit. It's so important not to because I've gotten burned so fucking hard trying to pretend I
Data
was
driver.
confident I was gambling. Yeah. So
Yeah. Well, all right. Let's wrap this up because I still got to write something tonight. Maybe I'll just give everyone charts with lines.
I
No,
mean,
I mean, well, this week's weird, right? Like I expect the next 2 days to be pretty uncertain. You know, like we definitely have a little bit of room to the upside. We definitely have some room to the downside, but you know, as we approach SLD, you know, that's going to be the question, right? It's like, are we going to trade up in the channel? Are we going to trade down? Tonight's futures are like up 5 BPS. They tell us nothing, right? China's pretty flat. Like everything's so flat that we're not really getting any leading information. I guess oil's down a little bit, which could negatively affect S&P. T-bill futures are down a little, which is a positive. So, yeah, tomorrow's very uncertain. I'm sure we're just going to trade positionally. Um, and we have a pretty broad range this week in the mid range. You know, this is 41. This is a $40 range. So, a lot of money to either be made or lost there. I think I'm straddled at 41.20 right now. Yeah. I'm straddled at 41.20 going into tomorrow morning. But yeah, I mean, it's the early part of this week. You know, you either don't want to position for the early part at all, and you want to start looking for upside opportunities for SLD entries, which is probably how I'll play it, right? Like I'll play the intraday because I always do, but I will probably say that my my inclination into the end of the week is bearish, right? And then so you know I'm just looking for this like T+2 period for short entry opportunities in upper ranges if they make themselves available. And then remember, if we cross either 4140 or 4100, you know that is like with any momentum, right? Where you can't just like tap 4099. You really need to move down to the next relevant strike, like 4090, 4150. That's going to be very directionally relevant into the middle of the week. JPOW is having a monetary policy conference with Ben Bernanke on Friday at 11. And I am positive that it will have an effect on the market. Maybe not a positive one. We'll see.
Whew. Yeah, fun week. Fun week
Yeah.
ahead of us. I mean, the times are getting more uncertain. This is kind of the dream, right?
Yeah. Also, guys, remember something else I noticed when I write Pickles picks. First off, they are only true in the moment I write them, which is a moment when the market's closed, right? Things change. Things change into open. You need if you're playing them or you're paper trading, whatever you're doing with that analysis, you need to reassess every stage of the trade. You cannot just assume because I have written it that it is like the word of God and it will be true eventually. I mean, I'm pretty good, right? But I'm not perfect, and market conditions are always chaotic. So you do need to assess the trade on your own. Don't just rush into things and buy at market open. You know, look and see can I get a better opportunity. Sometimes market direction will shift from the initial expectations. That shifts risk, that shifts price target, that shifts your midpoint, that shifts the strikes you enter, right? Like everything can change from the time I write that till the play is like entered, right? Or you know you make your own strategy for it, right? And so yeah, reassess things. You know, don't just if like Amazon opens tomorrow up $10 from where it closed Friday, obviously the trade that I wrote about the night before is invalidated. That doesn't mean that a short position on Amazon is invalidated, but it does mean that it has to be reassessed, and you have to take the new information into account when planning your position. I know a lot of you that have been in the pickle jar like a long time. You already know this. You know what to watch out for. You've learned to be patient with those entries, but not everyone has. So I say it for the benefit of those who haven't. You know, you do have to kind of weigh new information as it becomes available. Thanks. Thank you guys. And yeah, I'll see you all tomorrow morning, provided I wake up.
Well, good night, everybody. Thanks,
Thank you
Greg, for
guys.
having me on.
Later. Yeah, no problem, Dork. See you tonight. Later, dude.
Later.
Bye, guys.